Laura White, she's a nurse from Dublin. She's 35 years old. She borrowed $245,000 to buy a house in Coolock in 2005, but by 2009 she wanted to move away from Dublin for personal reasons to take a job in the west of Ireland, and she really couldn't afford to repay her mortgage. It was in about €1,200 a month. So she handed the keys back to the house to the bank in 2009. The bank sold the property and would have been left with a substantial loss and couldn't recoup the €245,000. So it was left with a shortfall of about $170,000, and that includes arrears and expenses. So what the bank did is it sued Laura White for recovery of that amount. But clearly she couldn't pay it. She was earning a lot less than she had been during the boom years. So she negotiated through her lawyers, through this New Beginnings group, which helps people out and who are in arrears. And they reached an agreement that over a 6-year period, she would pay the bank back the €18,000, and that she would settle the remainder of the $170,000 that was owing to the bank. So effectively the bank was writing off $152,000. Now there are conditions attached to it. She must pay the $18,000, which works out at €250 a month for 6 years. And if she doesn't meet those repayments, she faces a judgment of €120,000. And also, she wouldn't be able to borrow in that period of time, so she wouldn't be able to get a personal loan or a car loan or any other type of loan during that 6-year period. So she's tied into that for a long period of time, and obviously she doesn't have the property anymore. There's a huge amount of unsustainable mortgage debt in the country. If you look at the number of mortgages that are in arrears or have been restructured so that borrowers can make repayments to the banks, it's over 100,000 mortgages out of a stock of about 740,000 mortgages. So there's a lot of people out there in real difficulty, and really they have mortgages that in many cases they will never be able to repay. So Laura White's case is a good example of what borrowers need to agree with their banks. They need to have their mortgages written down to a sustainable level, to a level that they can afford, and also a level that incentivizes them to repay. So Laura White made it very clear in her case that she recognized that she had these debts. She wanted to honor her commitments, but she just couldn't do it given her earnings and what she would take in every month, and it certainly wasn't enough to meet the mortgage repayments. So there are many people in the same situation as Laura White, and it really reflects a much bigger problem that's out there for people and the level of household debt that's out there. Well, I think the banks are going to tread very carefully on this issue, because they will deal with cases on an individual basis, so case-by-case basis. They'll look at what the borrowers can afford, but they've made it clear that they don't offer debt forgiveness. It's not a policy that the banks have, and the concern is that you will have people who don't want to pay pleading a case that they can't pay, and in the hope that they will get a better deal. But as we've seen in Laura White's case, you know, if you agree to pay a certain amount every month to clear your debts, there are very stringent conditions attached to that. You could face a judgment. You can't borrow again for that period of time. So it is very difficult for people in that situation. But also the banks need to be realistic. You know, if you cannot pay back your mortgage, and you're unlikely ever to be able to pay back the mortgage, then it's in the bank's interest to actually agree a sum of money that can be repaid, so at least something is paid off, rather than getting a judgment against an individual and repaying that sum of money. So I think the banks recognise that you can't get blood out of a stone. You need to agree deals, and you really need to accept that certain people will never be able to repay their mortgages, but they might be able to repay something. But what the government and the central bank is encouraging them to do before the new personal insolvency legislation comes in is that the banks themselves agree these informal arrangements and deals and debt settlements with their customers, rather than go the legal route, which adds all sorts of extra costs into the process and can make things matters worse, both for the bank and the borrower. And if you look at the personal insolvency legislation that's going to be introduced, we heard yesterday that it had been postponed by 2 months because of concerns around the complexities and constitutional issues that arise with the personal insolvency legislation. So it's a piece of legislation that is absolutely crucial to solving the problem. But the government and the central bank would be keen that the banks will do their own deals before they ever need to use this. And one aspect of the legislation is personal insolvency arrangements, which deals with the debt between €20,000 and €3 million. and that takes in mortgage debt. And it's quite a controversial measure. The banks certainly aren't happy with it, because what it does is it can force them to write down debt in a situation where they don't need to go to the court. So it's a non-judicial debt settlement arrangement. And the banks are concerned about that because they feel the 3 million figure is too high, and it could bring in buy-to-let debt and it could bring in property investors, whereas they believe that the focus should very much be on keeping people in their family home and focused on debt relief for people who are struggling to stay in those homes. So it's a really tricky area. It's perhaps no surprise that the legislation has been postponed so they can get it absolutely right. And Brendan Howlin, the Minister, said yesterday the Troika were keen to get the legislation absolutely right. So I think in the meantime, while the legislation is still being worked on, you will see deals like this being done, and the banks and borrowers being more realistic, perhaps in recognition that these deals are going to be happening anyway through the new personal insolvency legislation. So the banks are saying, well, we may as well do it before it comes in on a legislative basis and agree these deals.